Welcome back, and joining me with more insight on the day's trade is Annatjie Van Rooyen from My Wealth Investments. Annatjie, thanks so much for your time today. Now, it does seem like we're on track to close off in the red for February. This, as you know, Trump's tariffs and his threats keep everyone really nervous and just jitters all around. Just walk me through some of your analysis of trade in February.
Good afternoon, Annatjie, and thank you for having me. Yes, as you have rightly mentioned, actually global markets are ending off the month on the back foot, and this is all due to tariffs now kicking in and becoming a reality. The 25% on Canada and Mexico will take effect on, I'm not sure if it's Monday, but it is early next week.
Yes.
And then that extra 10% on China also takes effect. And this is creating a lot of uncertainty because China has already announced that they will react with counter tariffs, and we are waiting for that announcement. The counter tariffs will obviously affect major industries, and this trade war will play out on the global stage. And this will have a very important impact on consumer prices and inflation expectations. So concerns about economic growth at this point in time, those concerns are mounting. The dollar is marching upwards and probably will continue to do so. And we are seeing the safe haven trade playing out. Investors are buying US treasuries. We've seen about a 60% drop in US bond yields for this month already. So that's where the money is flowing. So that tells you everything about the market's reaction.
What I found really interesting, Annatjie, is that the local unit has really been holding up well, just trading between that 1830, 1855 range. What's the reason behind that, considering that, you know, the dollar is quite strong?
Yes, you are right. I think it's because our local growth fundamentals are still in place. Nothing has changed. But unfortunately, a lot can change next week if China come out with counter tariffs. So for now, I'm still positive, but we'll have to see. It's very uncertain at this point in time. But I also think the fact that load shedding, they have resolved that situation pretty quickly or rapidly. That definitely was a big boost for the currency, because if we had fallen back into the old cycle, the rand would have weakened quite substantially.
Listen, I'm crossing fingers, I'm crossing toes that this upbeat sentiment here at home really filters through to growth, so you know the economy can actually grow. Let's move over to some company news. Northern Platinum out with half-year numbers today. Earnings really down close to 50% and on the back of lower metal prices. Nothing to be surprised about here, right?
No, it comes as no surprise. It's been well guided by management. The revenue was a miss of, or it was a negative number of 2.9 or 3%. The operating profit came down 55%. They've slashed the dividend down to 15 cents. And I think the problem here is that they're operating in an environment that is in a downtrend.
Yeah.
And if conditions deteriorate, they would have to adjust their expansionary capital expenditure to preserve liquidity. And if PGM basket prices remain low, it will continue to constrain their earnings going forward.
And you know, I was looking at the capex spend, and that amount is quite, you know, large considering the constraints that, you know, they're facing.
Yes, but to remain innovative, they have to continue to invest. So it's very unfortunate if they end up in a situation where they have to adjust it downwards. So like you say, fingers crossed, let's stay positive and hope that we'll see the growth coming through in South Africa. But we need China as our largest trading partner, and now China is entering into this trade war with the US. So I don't know where that leaves us.
Really a catch-22 for our local companies. Let's look at MTN. MTN Nigeria in particular out with numbers today, and that annual loss just widening. But you know, when you talk to analysts, when you talk to people on the ground, it does seem like sentiment is improving on MTN, particularly because that tariff hike seems to, well, rather that tariff hike will start coming through, and the currency woes seems to be dissipating moving forward.
Yes, I don't think people are actually even paying much attention to those numbers because that's now in the past. And they've also come out with another announcement today saying that the service revenue for 2025 will be in the mid 40%
Aha.
increase. I think that is what the market's focusing on. And that is due to the 50% increase in mobile service prices that's been authorized by the government and also those payments from the USSD platforms by the banks. So the earnings revisions for MTN have already been very positive, and we've seen that reflected in that share price. So I'm quite positive on MTN going forward due to these tariff hikes. That's the only tariff hike that at this point in time we can be positive about.
Let's move over to
But also, sorry, at the same time, remember they never had a tariff hike for 11 years.
yes,
So even
yes.
though I feel sorry for the Nigerian consumer, they've never seen any hike in prices over 11 years, so it can be justified.
All right, Annatjie, before I let you go, let's get your stock pick.
Well, I still like the South African banks, and I think one needs to be a bit defensive under the current circumstances. So I'm going to go with First Rand. They're releasing the interim results next week, and management has recently reaffirmed that they have seen a solid operational performance across all divisions. And I'm hoping that better than expected cost management and improved credit performance can provide a nice underpin for that earnings momentum.
All right.
So fingers crossed.
Yeah, fingers crossed. We all have our fingers crossed, our toes crossed. Hey, we need that growth to come through. Annatjie, thanks so much for your time and sharing your insights. That was Annatjie Van Rooyen from My Wealth Investments.